Meet Cytachain, the world's most innovative crypto ecosystem. Cytachain simplifies DeFi for mainstream users and seamlessly integrates crypto into everyday life. Discover the endless possibilities with Cytachain's Layer 0 blockchain. Go and check them out, cytachain.com.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Metis is a Layer 2 network powering the next generation of decentralized applications. Everything we need all in one. Permissionless, frictionless, and boundless. Go and check them out. Metis.io.
Have you ever wanted to invest in real estate but never had the means to do it before? With Credifi, your opportunity has arrived. With as little as $100, you can tap into a whole new world of reliable loans backed by a range of real-world assets, including real estate, future receivables, and more.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone a few minutes past midday, which makes it the same UTC. Apologies for the absence in the last week. I unfortunately was a little bit unwell, currently recovering from a chest infection, but couldn't keep myself away from the charts and all of you as well, especially in the current market conditions we've got. It's fantastic to see so many of you here. Lots and lots of old amazing faces and lots of new as well. A big shout out to everyone. We can see Erica straight in the chat first thing this morning. Loretto Jr. Whack, great to see you here as well. Craigie boy, great to hear you. Hope we're not getting in the way of too much work, mate. Nelson from Chicago as well. Fantastic. Welcome everyone. Welcome. So normally we reserve cheers, Whack. Yeah, getting a little bit better, guys. Got a pretty heavy course of meds that I'm on, but hopefully all looking like it's getting a bit clearer. Either way, it's brilliant to be here with you. So, and a very big shout out to our little legend, Zach, who is tuning in today as well. Great to see you, Zach. I will make sure to watch my P's and Q's even more so. So let's make this a little bit bigger, guys. Now, really what I want to do is first day back. I understand education-wise is great and that's something we really focus on. I've obviously done a lot of that in previous sessions as well. But I really want to kind of look at some charts on that for you guys today. I understand there's a lot of things popping off, a lot of indecision in the market. Some people saying like, oh, we've reached an interim top. Other people saying buy the dip. So really, it's just, I thought it might be interesting for you guys to see my perspective on it and kind of how I navigate through that. So obviously, we're just going to start with Bitcoin on a very basic kind of level. We're going to show you some high time frame charts. We're going to work our way down through those as we go. But then if you've got any particular assets that you're interested in, obviously mostly crypto, but we cover real world assets as well, legacy markets, equities, etc., and Forex, then let me know. But if there's maybe any tokens that you're holding, you've got questions on bits and pieces like that, let me know. I'm going to start by rolling into some Bitcoin analysis. We're going to start with a nice clean chart. And then from there, we can pick up as you guys see fit. So first things first for me, the reason that I've been showing a little bit of caution at this level is really, really simply because if we just zoom out, we've got a weekly chart here. We can see the previous all-time high here. Yeah. Now, this obviously differs slightly from different exchanges, right? Binance, for example, 69K, 69,138 on Bybit. But something that's really important for me when I'm looking at anything is how price moves when it reacts with a key level. So if we look at our previous all-time high here, we can see that what was quite key about this is that we did actually get an initial rejection here. Yeah, so look, when we take a high or a low, then it makes a lot of sense. Certainly how I look at the market is when we engage with a high or a low, we want to see how price reacts when it gets there. Yeah, so we're focusing at the moment on this specific wick here. All right, and this is just to give context for what we're going to look at. Hello, Nick, mate. How are you doing? So look, this long upside wick here, we can see immediately that we're getting absorption, right? Now, if we imagine it like this, we've got a lot of liquidity resting up above here, because there's lots of stop losses from people that were short here, right? Price comes back to this level, is seen as a natural area of rejection. It rejected price before. So our immediate assumption is that we're going to see a rejection here again. Unless price gives us a reason and shows us conviction as to why it's going to move higher, all right? Now, as an example here, if we rewind to this price action quickly, when price set this high, now look at the candle that came through this high, yeah? this candle, large bullish body, yeah, very small wicks either end. It shows momentum, it shows displacement as it moves, right? It shows conviction to move for higher prices. Now, the next high that we set here, right, we can see here that price kind of closes above again, but kind of fails a little bit more in that conviction. Now, what can we do with that information? How do we put that into an actionable plan? Well, quite simply, when we were back here, we had this close above. The next candle moved higher again. In doing so, we did two things. We took some external liquidity and we also left these gaps, right? For the sake of clarity on this one, in case there aren't people that understand this, you can look back through my live videos and I do explain these fair value gaps. But what I really want to focus on here is I'm just going to do these ones in green, yeah, because it just shows that they're bullish, and we'll do the bearish ones in red. Now, ultimately, we've had an expansion move here. We've left this gap. So for us to remain bullish here, there's an expectation that price is going to draw back down within this gap and then make a move towards this high here, all right, which we can see that we got. Now, continuing that theme, when we took out the next high here, and again, we closed above it, but what we've also done is taken the liquidity from this high. We're now saying to ourselves, okay, where can price come back down to? Where's price going to find balance? And we see that we also have this gap here, right? So it's between this candle's wick and this candle's wick. We can see this gap, same as this one, but a little bit slimmer. Now, following the same principles, yeah, our expectation is that if we hold this gap, then price is once again looking for liquidity higher up, which it finds above this high, all right? Now, I'm just going to make that slightly different, because then ultimately what we're saying to ourselves, well, this is our line in the sand, right? Price has supported itself there. It's made its way to a new high. If it's going to reject here, this is what we want to see hold. Ultimately, it does not. It closes below it, meaning that we inverse this. And then our bias moves to looking for liquidity lower down. So we had this low here, which has significance because it's also within a fair value gap. It would be an intermediate term low for anybody that studies the teachings of ICT, of which I'm a huge fan and had a really big influence in my early stage trading career. But they're also very, very simple price action principles, right? It's how we interpret them. So once again, we see the displacement below this low, right? So when this happens, we can see that there's momentum moving lower. Now, what we then want to do is look left and see if we have any untapped liquidity. Now, in this particular instance, we'd already swept this low. So this is where we need to be cautious, right? However, I know I sound like a broken record, but with the same principles applied, if we've swept external liquidity here in the form of this low, in the same way that when we swept external liquidity in the form of these highs, we look for price to revisit a gap, right? Now, because we're bearish here, the first gap that we have is here. And we're going to do this in red because it's a bearish gap. So we sweep this low, price draws into the bearish gap. We have a bearish bias, so we believe price is then going to seek liquidity lower down. Where does that liquidity rest? Well, in the form of this low, okay? We can see that it took that low out already, leaving this low intact. So that's where our assumption is that price is reaching for. So once we've taken this, we then expect this to hold, yeah? When it doesn't, and price closes above, as we can see here, we once again invert it in the same fashion that we did this, except this time with the expectation being that price is reaching lower, we've now inversed a bearish gap, meaning that our expectation is for price to move higher, okay? That's the dynamic that we're looking for in the market. So as we rest at the moment, the key thing for me on a weekly scale here, this was the all-time high, was to see price have some kind of strong close above, showing that there was momentum of price going in. Now, what we have done, yeah, is we've left this as a doji, okay? So doji candles are normally a sign of indecision. Now, it's very, very easy to understand why. There's a lot of speculation in the market. Price has obviously had a really, really big extended run to here. I mean, when we look at, you know, and one thing I want to do here as well is put on our B Pro indicator. The great thing about this is if you're somebody that's struggling with trend or somebody that's really kind of struggling with that side of price action, it's so, so key that you're on the right side of the master trend. And on this case, it's reflected on a weekly scale. It's a very simple, but very smart indicator that allows us to see that, you know, we were favoring a bearish price action here until this point when we're favoring bullish price action. And this has helped us stay bullish all the way up to here. Now, this is a high time frame, right? So on a weekly scale, it takes a while for these to turn. However, we always want to remember that, you know, the trend is our friend until the end, right? So we don't want to fade it. However, we also want to be realistic. And what we can see is that in a lot of these big I don't want to say you were semi kind of parabolic runs, but on these big runs up in the same way that you get these runs down, is that price has corrective moves, right? You know, we can see it very clearly here when price shifted trend here. Once again, really good early stage indicator of this was looking at the inversion of this bearish fair value gap that should have, if we were going to continue to deliver bearish price action, rejected price lower, okay? It didn't. Look at the momentum on that close above. We're now looking at this area here, which then becomes a balanced price range. That's because we've got a fair value gap overtaken with another fair value gap. We're looking at this to be strong support. However, we can use our Fibonacci's here as well and take the low, right? And it depends. You have to study this, right? Whether you're taking the low of the leg or of the move, yeah? So that means that there's a swing low in here, but I like doing this from the origin of the move, meaning this was the lowest low before price then broke this high, shifting structure. So all we're doing is taking it from that low up to this high, okay? So this price leg here, this delivery, and we can see how price did that, came back down into the lower 50% towards our golden ratio, and has then pushed up since. So whenever we have an expansion, it's natural to expect a corrective move, okay? So when we look forward to here and we say to ourselves, okay, well, if this really down here was the last low, and actually I would favor this one, and we're moving up to this, we can see this correction here didn't even get down to the 50%, right? We would be looking at this getting probably to about the 3.2, I think, something like that. Let me just put on a standard Fibonacci for you. Yeah, 382. Okay, so we got up to here, corrected, held the 382. Now, when we're using Fibonacci's, a really good way to use this is to look at this as an indication of strength, right? So we can see here that in this big move higher, price couldn't even get down into the lower 50%, which is what we would want ideally to find a high probability long setup, right? Now, if we look at the same principles here, using this low to this high, right, we can see the price is yet to have any kind of significant correction. So for me, it makes sense that this could be an area that price could look to pull back to. Now, once again, you need to decide if you're taking the current price leg or if you're looking at it from a point of view of when it changed structure. Because look, higher high, that was a lower low. Yeah, so that was a shift towards a break in market structure, but was not confirmed before it moved back. For me, because we're such parabolic price action, I'm very, very interested in what this current price leg is doing, okay? So if I'm looking at this and I've got my 50% marker on, because we can also look at this as like a premium and discount range where we're looking at the low to the high and we're saying, well, in forms of risk to reward, we're looking to long from the green, the lower 50%, yeah, which would be considered discount. And we're kind of favoring shorts in the upper 50%. Which is premium. Again, these are ICT concepts. You can study them directly from the source. But the principle also makes sense, right? When you have a large expansion in a leg like this, you're then looking for somewhere for price to correct to. Where makes sense? So for me, on the premise that we've taken external liquidity here in the form of this high, remember like we were showing here, we've taken liquidity, we look for price to correct back to a fair value gap. Now, this is the fair value gap for me that makes a lot of sense. We'll do this in green again to show that it's bullish. We're just going to move our premium discount range to the side here so it's not in the way. And then we're saying to ourselves, in an ideal world, if we were to get a correction down to the 50% of this, then that would be a really, really nice place to sit in there and look to target some potential long setups. Now, that's not saying that we're going to correct down to here. We also need to have the context of the time frame. For me, if this week just took off and became incredibly bullish and we had a strong close above this level, and especially if we had a strong close above this, obviously do that a bit better, and we'll do that green to show that it's bullish. So a close above this and a good solid bodied expansion like this, where we have a lot of body and very little wick, that would give me a little bit more conviction that price is looking to move higher, okay? So considering that at the moment, I'm not saying that I'm bearish. We have to be bullish on this time frame, right? Looking at the weekly, but at the same time, it doesn't mean that we shouldn't be prepared to allow for corrections. So as we step into this week, we've now moved to a daily chart. Clean this up a little bit. And we're asking ourselves, what does price action tell us here? Well, something that's quite interesting with price action here is the last thing that price has done within this is actually take out this low. Right? So price has come down, swept this low. So whenever we take liquidity, we're now looking for price to have a bullish reaction higher up. Now, for me, there's not really enough here on the daily chart for Bitcoin for me to say with real conviction where price is going from here. We've taken an all-time high, we swept liquidity from the highs, we've corrected a bit lower, right? There's no fair value gap in here for me to target. There's a large order block, right? But that is a large area that we need to dip into. Sorry, quickly, Miguel Sanchez, hello, mate. I didn't see you there, apologies. Runda, massive distribution multi-year cycle. Okay, yeah. So especially if you're looking at market cycles, bits and pieces like that, people like obviously CryptoBerg, Julius de Campner are real forefront on that kind of area, especially with stocks. And if you look at like the Almanac, which is really super interesting. And Julian, hello, mate. Sorry I missed your question. Sorry if this is a dark question. Are there really people who went short at the all-time high in 2021 still have those trades open 3 years later with their stops and liquidity still there? Yeah, so basically, if you're looking at it like this, the way to think about it, because I know that can seem unrealistic, but what we're talking about here is we're talking about people with really, really big time horizons. Okay, so if you look at like institutional investors might be looking at Bitcoin as an investment on a 5-10 year plus time horizon, but it's not just that. There's speculators there as well that are looking to short that level, and there's also people, right? Because when we look at this level, and just go back to it over here, this area here, the same way when we set this high, as soon as we came back to it, we had that reaction. Now, I know this is a closer in terms of period of time, but also look at the gap between this, and then the immediate reaction we had coming off of that, right? Then we came up, swept this high again, and had that reaction again. So I always like looking at the charts in terms of human psychology, right? And not to speak as a psychologist, because I'm not one, but it's just the nature of where the liquidity is, right? Now, I just think that something else that's worth kind of noting here. It's not just your kind of stop losses from people that were short here. So basically looking at it like this, if you imagine there's just this huge pile, right, of stop losses up here, meaning people that were short here, if price triggers their stop loss here, it turns into a market buy order. Right, so what does that do? Let's just zoom this forward a little bit. And we're just looking at this as kind of like our liquidity pool, right? Now, I know it's obviously a bit bigger than that because it's encompassed this. But what this liquidity pool is, it offers temptation for major players, for large accounts, for institutions, because if you're looking to place large orders, right? And this is why the term retail comes up. I'm retail, TBN is retail. Pretty much all of us here are retail. When we're talking about institutional buying, you're talking about buying in the tens, hundreds of millions, sometimes billions, right? So if we think slippage is a problem for us, for these people, it's huge. So they need to buy and sell at key levels where there's a belief or where there's proof that there's a large amount of liquidity resting. So a lot of people, bots, strategies, traders, funds, well, when we've crossed this all-time high and we've had a strong breakout or what someone would consider a breakout, you're going to trap a lot of people into going long here. Now, if you're an institution and you want to throw money into this market that can move it aggressively in one way or the other, then you really want to make sure you're on the right side of that. Because if everybody's going long here, yeah, then you come in with tons and tons of capital. And what you're going to do is push the market up very quickly. And you're going to notice that on the way up, you're getting slippage, right? And what that means is that your average buy price is getting higher and higher and higher, which you don't really want, right? Now, on the flip side, if you've got this ready-made pool of liquidity up here and, retail and the sentiment is very long and people are starting to go pump, 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 they just think this thing's going to the moon, then this gives you a really good opportunity to take the other side of that bet, yeah? And by taking the other side of that bet, what you want to do is take all these buy orders and fill them with your sell orders. And that's why we see these kind of corrections. Now, it can be that it's in the case of previous stop losses being left up there. It's definitely plausible because you have a lot of institutional buyers that will have longer time horizons. But it's also looking at this concept of max pain, all right? Now, however you interpret this, basically, if you're, and all trading, investing in that has an element of gambling to it as well, right? So the psychology of it is, if you're looking to outsmart the market in a lot of ways, and the reason these people have to do it is because of the size of their positions, is if everybody's getting really, really super horny for Bitcoin going long here, right? then you taking the opposite side of that bet, you can get all of your positions filled with minimum slippage. Yeah. And if you're right, you've basically caught the top here and you are just in a position that you can manage very easily down. If you're wrong, then the chances are you're going to get enough of a corrective move down to key liquidity. In this case, on this chart, this is what I would be looking at for that. Right, and the reason for that is we've got an abnormal wick there. See, the long downside wick shows there was buying pressure. It's being generated from this fair value gap here, and it's also on the top of this weekly fair value gap that we identified earlier. So if I'm a major player and I've decided to short this move here, right, my stop loss is somewhere up here, then my first target can be somewhere down here, right? So then what I'm saying is, okay, by the time I've made my money there, I can secure my position, move my stop loss up so I'm risk-free on the trade, and then we can watch the trade unfold. So I hope that answers the question there, Julian. Apologies if it was a bit convoluted. Do please come back to me if it was. Gordon, Savaloy from good old Bedford, good old solid Bedford Gordon. What an absolute gem. Good quality folk they are up in Bedford. And thank you, Gordon. Hit the likes. Yeah. So, Miguel, what do you think about the RSI? Do you use it? Yeah. So, you know what? My only issue with the RSI is, and I've got a really cool one on here, actually, that was one of my very few attempts at doing some code. So, I'll add it on here quickly so you guys can see. I used to build a lot of systems based around the RSI, and there's a lot of really, really good ways that you can use it and that you can interpret the data, right? Now, the one that I've got coming up here, hopefully you guys can see as well, I programmed some divergences into it, so you can see when you're getting bullish and bearish divergences as well as hidden bullish and bearish divergences. Now, the key thing with the RSI, just to touch on this quickly, is your levels, right? So I would always consider 30 down here as oversold and 70 up here as overbought. And then I've got a midline here, which sits at 50. Now, the idea is that if you get above these areas, right, then, you know, especially with any kind of, you know, momentum, like we can see this up here, then if you're in an area of being overbought, then it's a good opportunity to sell, or you can expect a corrective move, or at very least you can be cautious about going long. Yeah. And then let's add a few more in here. When you're oversold, meaning you're down below this level, then that should provide you with some good opportunities to go long. All right. So if I just move this up a little bit so you guys can see it clearer, and we kind of compress this. Now, if we look at the same position over the chart here, what we can see is this found the corrective move here for price moving down before it continued the master trend. So here it was very, very confusing because it's basically warning you to stay out. Yeah. But actually what happens is the trend continues quite aggressively. Similar situation here. When we're trending up aggressively, we can see we get overbought here. Price cools off a bit, but you can see here, look, price is just heading down here on the RSI. Yeah. While price action continues to go up. So it's one of those things that sometimes you need to kind of, what we would say in England is take with a pinch of salt. The way that I prefer to use the RSI is having a handle on the master trend. Like I say, if you're someone that struggles with that, something like BPro is going to be your best friend, all right, in this example. So you can take something like BPro, you can set it to a higher time frame trend. So I think let's just say, for example, we've got the daily there. We want this to be the weekly to govern our master trend. So what we're saying here is that, and by the way, the thinner lines here are the current time frame trend as well. So the idea of BPro is that you're bullish on the weekly, which is here, yeah, the thick grey line. However, then when the thin grey line switches to bullish as well, that's when you take your entry. Yeah, so you might want to take a pullback to this area, for example, and then have your stop loss below that low, just literally as an example. And then what you would look to do is you can then look to hedge, or you close that position out when the trailer turns black here. Yeah. And then it allows you to get back in here again for a continuation trade. So you would get back in on the close of that candle there. This is a really nice one because you've got a nice tight stop loss. It even tells you what your stop loss is based on the trailer. And then again, you would continue to hold this, and actually you would still be in this position, right? Now, BPro does it exceptionally well. You can also do it with other indicators like Supertrend and that as well. Obviously, I'm biased towards BPro. It's our indicator that we built, so we know what it does. But the principle is the same. What we're doing is we're looking from master trend, yeah, here, which we can see is our high time frame trailer. Then what I would do is I would then look to the RSI for when it hits points like this. So we're higher time frame bullish. I'm not really interested when we get up into oversold because the price can continue on up for a long time at that point. What I'm quite interested in is, overbought. And what I'm interested in is when we come down to oversold, right? Because that means that I can get some buying opportunities. So if I look at when we kind of dipped down into oversold here, just going to put these verts across a line. Yeah. Then we can see this window here gave us the opportunity. Now, I'm just going to minimize that a minute so that it's clean. And I'm also going to hide the B Pro just so that we've got a nice clean chart. So B Pro has kept us bullish. The RSI has told us, okay, look, we've dipped into oversold here, meaning there could be a buying opportunity. What do we do with that information? Well, quite simply, we use this as our area to monitor. And then I'm just going to get rid of these very quickly because we know that we're now bullish here. As with anything that I do, especially with any trade entries, I like to see inducement, meaning I like to see price sweep a low or a couple of lows. This is even better because we've got relative equal lows. So remember, we're bullish from this point on. We can have a really simple entry method like this. We want to see liquidity swept, and then we want to see a high broken above. Right? So this is the high that swept the low, right? We would have two things in play here. You would have a breaker candle, right? So this is the up candle before the sweep on liquidity. Then I would want to see price close above this level, at which point I'd start my limit order on this line, which was the high, yeah. Stops below the low, and then ultimately I'm looking to trade it higher, but always via points of liquidity, yeah. So something like this. I would then wait and see how price reacted here. Again, like we touched upon earlier, when we're looking at how price reacts at key levels, we can see this strong expansion over, yeah. So from here, what I'm doing is I'm remaining bullish, yeah. So we can see here what happens. The RSI gives us a warning here, right? Let me make that a bit clearer actually, because that's when we stepped into it and that's when we came out. So this here is telling us that price is cooling down. Now, what I like using this for is very similar with B Pro, right? If I put the divergences on B Pro, then if we get any divergences, see this? And this is hopefully a great example. If we bring the RSI up now, look how we get this bearish divergence. And B Pro is very, very smart, right? It uses 10 or 11 different oscillators. It collates the divergence data from all of them and then gives them to you as a percentage here. Now, once again, similar to the RSI, when we're in an established trend, so we're clearly in an uptrend here, and you don't need me to tell you that, you should be able to see that from the charts, right? Even without the B Pro trader and that, look, higher high, higher low, higher high, higher low, higher high, higher low, etc. Right? There's no doubt price action is bullish. Don't try and fade that. You don't need to, right? All you need to do is just set yourself some parameters. Now, when we're in a trend like this, your divergences are going to do one of two things, right? They're going to catch the reversal, which it did here and here and here as well, because we were in an uptrend here. This caught the reversal back to a downtrend. Or more of the time, what you're going to do is you are going to find these divergences give you the most beautiful opportunity to find the corrective moves, yeah, in an ongoing trend. So just to highlight these, right? And also, look, let's highlight these two as well, right? Let's not leave out any data that's on the screen, so we're not being subjective, right? So what happens here, let me get rid of that for a minute and that. Right? What happens here is we're in an uptrend. What we're looking to do in an uptrend are points that we can get involved within that trend. Yeah. So we want to be able to find, like, where can we get involved? Yeah. Because I think this is a big problem for a lot of people. A lot of people reach out to us and they kind of say, look, I know that I should have bought down here when, you know, Crypto Bird was screaming at everyone that you should be buying here. And people don't. And it's a very difficult thing to do. You need to go through a few runs before you really, really learn the dynamics, right? And even then, sometimes you'll lose. Burb, recently, we post all of our trades live, okay? But if you look at Crypto Burb, you know, he's taken 2-3 massive wins this year and 5, 6, 7 losses, right? Because his system only has like a 30-35% win rate because it's a trend following system, meaning that when he gets in here, he can have astronomical returns because you're doing, you know, 5, 10, 20, 30x on trades, right? But you are going to get stopped out more often, All right. If you want to know more about the B Pro, if you want to know more about the memberships, bits and pieces like that, look, it's a free stream. I'm not here to shield to you, but I am here to tell you that your education is massive in this space. And if you've got any interest in that at all, you can find the information on our link tree here, right? You can find it in the description. Go down and have a look. You can join for free. You can get trials for this. You can join through our members, through referral links. If you're interested at all, please do reach out. But back to this point, look, the divergences are catching when there's a discrepancy between price action and the oscillators, right? So this is showing us that even price action's bullish here, the oscillators are starting to cool off. This gives us a buying opportunity, yeah? This gives us a buying opportunity. This here gave us a buying opportunity and we still made money. This one here has a deeper correction, but look, this is where you rely on something like the trailer. This never flipped bias. Or if you look at the current trailer, yeah, you scale out of your positions there, but then you get back in here when it flips bullish again, all right? And even if you're not using B Pro, so let's turn this off. We'll leave the circles there because they're the areas we got the divergences. If we're now looking at this with an RSI, yeah, what we can see is we want to say to ourselves, well, maybe when we're getting up here into overbought, maybe these are providing some really good opportunities for us to find corrections, yeah? So this area here would have given us an opportunity to buy again. This area here gave us a good buying opportunity, right? Now, we missed this one, but look what happens when we get back above the 50% line. We can get involved here once again. You would typically look for some kind of market structure break, right? So just to show it very quickly, you've swept a low here, yeah? Do that a bit better. You've also swept this low. And then you're looking for the high that sweeps that low, which is here, and then you'd look to be a buyer around there. All right. So in terms of using the RSI, I think it's a really, really handy tool. I really like it. It's not something I really use much anymore, but you can build some really good systems around it. Just like with anything, with any indicator is typically lagging. Just be really, really careful how you interpret the data. So when you start getting into overbought here, don't think that the market's just going to reverse. Use it as confluence to overlay that with other data. Yeah. So we can see here, this has been telling us to be cautious. Fine. But we can see we've had this now, and, you know, no one will ever sound as good as this man saying it, but Trader SZ, who was a huge part of my trading career and a big inspiration to me, and learned a lot from him. You know, when you're looking at a key level, he has this beautiful, simplistic way to look at it because he's so experienced. And he's saying, okay, well, is this a deviation, right? If it is a deviation and we've now stepped into here, then if we start showing weakness back below here, yeah, then we can look to find a way to get in lower down. Yeah, we can look for these setups to purge lower, and we can look and say to ourselves, well, does that make us super bearish overall? No. Look, we're still in a big bullish trend here, and corrections are natural, but we need to be prepared both ways. On the flip side, yeah, if this isn't a deviation, yeah, and we've now stepped back into here, well, quite simply, we've got this high, which is ready-made. If we now get back above this, yeah, and hold here, we can look for moves like that where we take liquidity from the lows, look for our market structure break here, and it allows us to get back into the trend. Yeah. So in terms of like your RSI, that can be really helpful. Yeah. It's just a bigger question of how you kind of interpret the data. And divergences are really good as well. But as you can see from this, when you factor in your regular and your hidden bullish and bearish divergences as well, then, you know, you obviously get quite a lot of these. And all this is doing is just simply looking at the price action here. Yeah. So let's just using this one as an example. And we can see here that there's a lower low, a low here and a lower low here. If we now mark them up on the charts as here, we can see that this high is actually higher. So that's where the discrepancy comes from. The indicator, the oscillator is moving lower, yet price action is moving higher, meaning that we've got a hidden bullish divergence, right? Meaning that basically, although momentum's dropping off here, price action isn't, the chances are that longs are accumulating, ready to move up. And by the way, guys, for anybody that is interested, there's a really, really cool feature on our website. Let me share it here, actually, which is thebirdnest.com/infographics. Am I spell that right? right? Things like divergences, hidden, regular, stuff like that. You can find all of these amazing graphics that our dear friend QBS has collated over the years. And we're refreshing this at the moment, but there's tons of good free resources on there, guys. So please do go and make the most of them. So guys, did anybody have anything, any particular assets they wanted me to look over for you? Are there any charts that have really caught your attention? Are there any alts that you're looking at? Is there anything that you're thinking, okay, I wonder where we go from here? So really good question there, Craig. We're going to slam onto that in a second, which will be a great way to finish up here on Bitcoin. I'm just going to clean this chart up a little bit and get rid of the RSI and probably most of this as well. I would think we are probably done with that. Okay, so just while I'm waiting for that, guys, waiting for that to come in. By the way, Margaret Ford, thank you so much. Very, very lovely and great to have you here as well. Welcome. Obviously, our wonderful friend Moral as well. How are you doing, buddy? And love the shout out to the Bird Nest and the Nesters. Love that. That's it. And as Erica's telling us all here, let's not encourage QBS, all right? So, good question here. Let's focus on this for a minute. So, Craig, in your BTC daily report last night, very good, by the way, thank you. You're waiting for 69K for confirmation. What about waiting for 70K as it looked like a suspicious move? Should we wait until we get above that? Cool. Well, I tell you what, let me run everybody through the report from last night, all right? So, let's have a very quick look here. So if we start here with our weekly, all right, we can see we've got the same chart here. This is just who I'm trading with. This is with Femex, who incidentally got some really cool community-driven stuff going up. If anybody's looking for a good exchange at the moment, you know, it's not to berate any of them. All the exchanges have their advantages, disadvantages. Femex are making some really, really big waves with stuff there. And they're actually at a position where just by engaging with this new topic they've got called Femex Pulse, you can earn prizes, you can earn points. The more you engage with the community, the more you learn, the more you trade, the more you earn. You can get referral. You can get paid out USDT, right, from their points. You can convert it to it just for referring friends to the platform. So do make sure to check that out. Craig, the 70 EK is on the 1 hour. Okay, cool. Yeah, for sure. Let me take a look. So just first of all, just purely from a weekly point of view, right? This is just what I want to start with. Just so this is exactly what I shared with members last night and basically what we've covered here this morning, yeah? Which is price has moved up and taken out this high. I've just taken a Fibonacci from the low of this move to the high. And what we can see here is that just below the 50% line, we have this fair value gap, which is a great target should price move lower, okay? I'm not saying that it definitely will, but should price move lower down, then that would be, for me, the key draw. I'm always asking myself, what is price doing currently? Well, price has swept a key higher, yeah? And where is the next most logical place for price to go? Now, price could just continue to rip from here, yeah? So I would continue to long that with caution, purely because we're very high up in this move, right? Now, even when we look at the big expansion that we had here, and using the same principles, taking it from the exact low to the high of this move, right? We can see that while price didn't quite get down to 50%, what it did do, it did have a small consolidation, right? And then it did draw down into this bullish fair value gap, yeah? Price very rarely reacts from nowhere, yeah? So what we're trying to do is paint a high time frame context here and then use our lower time frames to execute. So if I just drop that off the chart for a second, we can see with this previous move, what happened was price moved up, we had this big expansion, and then look how we kind of just sit in these down close candles, right? And then what happens here is we have this consolidation, okay, which we're just doing orange. Then we have this small manipulation here. This is looking at the power of 3, all right? Consolidation, manipulation to catch people offside, delivering here from a higher time frame fair value gap, which is bullish. Then from there, the third part of this is expansion, yeah, or distribution. So accumulation, manipulation, distribution, right? And that's what we've got at the moment. Now you can see this type of pattern repeat time and time and time again, all right? Even here, consolidation, price moves down, takes out liquidity below this low before then ripping higher. So as I'm looking at this, I'm saying, okay, well, if we now put our weekly back on, now we can see here the price in terms of that, you know, you can get these small consolidations here and price rips. How would I trade that? Quite simply, I would look for a change in state of delivery, meaning that even when we were here, right, one thing that we didn't do, and certainly didn't do with any conviction here, is coming and closing above this. Why is this important? Because this is the down close candle. Price closing above this would, we would be looking at that as a sign towards continuation. Sorry, guys, got a few works going on outside, so just shut the door. So this, when price closes above this, it sets this as an order block, right? So let's just look back. While we're bullish here, what do we want to see? Well, if we have consecutive candles, we allow for all of them. If we have individual candles, we simply allow for the one. If we have a large candle or a large collection of candles like these and smaller candles within its range, I'm still interested in this. And what I mean by that is, if I'm looking at this as the order block, which incidentally on my charts are always blue, then I'm not really interested in these smaller ones within it, because I've got this one followed by these candles. So that makes up one higher time frame order block for me. What I'm interested in is when price closes above it. This gives me a change in state of delivery, yeah? And that means that I'm then expecting continuation at least to the next liquidity point. And if we look at this, I would be favoring this high incidentally, because again, it's within a fair value gap here. Yeah, we can see here it's within this FVG, makes it an intermediate term high. So what I'd be looking for is what happens when price gets to here. And again, we see that strong expansion. There's no reason to want to fade that, okay? So if we're now looking at this in the same vein, we can see that this was the first order block candle that we had set, yeah? Now, price had a small close above this here. And is that valid? It absolutely is, right? A couple of things here that was quite tricky is, one, we'd already taken out the nearest higher, yeah, which is always a point to be cautious of, especially when we see a reaction like this and price coming back down. But also remember what I said to you about the candle itself. This has got a relatively small body, yeah, and then a longer upside wick and a longer downside wick. It fails to show much conviction, yeah? Look at this candle that broke out of here. See, it's almost all body. Yeah, to me, that shows conviction. It shows the bulls have stepped in here. Same way with this one. Big conviction here, and we didn't take out this higher, right? So that means, as a minimum, I'm saying to myself, well, okay, then I expect price to open this week and at least attack that liquidity. From there, I'm going to see how it reacts. Now, this, excuse me a moment, this is the only liquidity that we had here. Now, the smaller the order block, certainly in my opinion, then the less relevance it has. So you want to see something that's got at least a reasonable sized body on it. However, if you don't have that, right, if you don't have that there, then you have to take what you've got. And there's no doubt that when we set this order block, we closed above it, yeah? And then lo and behold, where did we reach for? Like I said down here about reaching for this liquidity, the next available higher was this, yeah? So once we closed here, people say, yeah, but you've missed all of this move. Well, you haven't. You're looking for this week here to draw down into a discount and then attack liquidity at the high, right? So for that, then I just want to overlay the same principle again. We've now got confirmation of this down close candle, yeah? So on a weekly scale, what do I want to see? Well, there's a minimum for continuation, and bearing in mind this is just on the weekly, right? So this is a very high time frame. If we get that weekly close above this, changing the state of delivery, then I'll look for price to go higher. If not, then it makes perfect sense to me that price is going to look for an area that it can correct to, which would be this bullish fair value gap down here, which starts around about 58K. All right. Now, that's not to put figures on stuff and say we're definitely going here, etc., etc. But for me, there's a logic to that. Okay. So what I'm then going to do is say, okay, on a weekly scale, if I'm feeling bearish here, right, and I'll leave that on there, then I can move down to a lower time frame like a daily, and we can see here, right? So look, we've already started to get a little bit of that corrective move down. Yeah. Now, if I'm expecting bullish price action, I can overlay the same theory. I can say, well, we've swept liquidity here. Yeah. So if we are going to have this big bullish reaction, And if this order block here, right, if this order block here is going to support price, then what do I want to see? Well, quite simply, I want to see price on the daily scale close back above this. Because this is what will give us our change in state of delivery. A close above here, and I think price is going to move up and attack. So that way, I've always got a plan to go both ways, right? So I don't want to ever enforce my will on the market. I don't think anybody knows exactly where it's going to go or what it's going to do. We're all playing a game of probabilities. I'm looking personally for liquidity. And what I'm saying here is if price is failing to get a bullish reaction here, where's my next target? Well, on a daily scale, it's here. It's this intermediate term low sat within this fair value gap. If I then apply my Fibonacci's again and say, okay, well, where's price likely to correct to, or where would it be good? We can see that this low sits right within the golden pocket, right? That's our 618 to 0.66 here. Yeah, so that's the golden ratio when you're looking at Fibonacci's. Again, I'd always recommend going to the source of looking for that. I'm not sure exactly who the source would be, but there's lots of different ways you can interpret Fibonacci's. For me, they're the key levels. I'm interested in the top 50% and bottom, and the 618, 0.66, and then the 705, because this tends to be a key area that we see a reaction for a corrective move. So with that confluence in place, my expectation here is almost for price to be reaching lower. Yeah. So just to finish that off, I can then move to say a 4-hour chart, and I can say, okay, well, what did I want to see here? Right? What would I want to see on this 4-hour chart? Well, I'd want to see something that gives me some conviction that price is looking to move down. If it doesn't, then from a 4-hour scale, I have to be kind of sort of semi-bullish here, right? Because we've swept a low, which is bullish. Now, the other thing we've done, and I appreciate this changes on different exchanges, right? But that, as I said last night in my report, is a fair value gap inversion. Yeah, that's a bearish gap there that should have rejected price. We didn't. We got a strong close above it, and now we're delivering from this bullish fair value gap here. So on this time frame, I have to remain bullish at the moment, yeah, because that's what price is telling me. Now, I've got this high here, which would kind of be my next upside target. So I'm saying, well, while price holds here, as we discussed before, we've got a key level, yeah. I'll draw that in. Yeah, cool. Do that a bit better. We've got a key level, right, like we have here. What you want to see with this is you want to see price kind of come down into a level like this, sweep, get back above that high, and then look to move higher, right? So you've got the sweep of the low, price coming above, you can put an entry on there. Yeah, lots of different entry techniques you can use, but once you close above, you can put your entry or a limit order on that line, wait for price to retest, and then we'd just be targeting this as our first point. Now, if price continues higher and higher and higher, great, that's what we want. However, at this point, we can mitigate our risk, move our stops up, and then stop ourselves kind of taking any unnecessary losses. So that's how I would be looking at that. Now, remembering that our higher time frame as well is saying that we could be in for a corrective move deeper, yeah, then what would I be looking for a move lower? Well, we've still got our high time frame levels on here. We can see these yellow lines are the golden ratio or the golden pocket, and we've got this high time frame fair value gap. So what do I need to do? Well, quite simply, I would want to see this inverted, meaning that I would need to see price close below this, yeah, on a 4-hour scale, right? So when the next 4-hour candle closes, for example, I'll be looking at this in 3 hours and 9 minutes. If it closes below here, then quite simply on an interim basis, that becomes my next target, because that's the next resting liquidity that leads down towards here. All right. Hey, just a dad. Hello, mate. Sorry, guys. I know there's a couple of questions in the chat. I will get across to this. Apologies. I know I've been rattling on about this for a while, but I know it's something that so many people struggle with. They would open the chart today and say to themselves, right, okay, market structure's bearish, lower lows, lower highs. But I think sometimes people kind of fail to say to themselves, okay, well, two things. One, what's the last thing price did in terms of liquidity? Well, the last thing price did here, yeah, as it came in, was sweep this low. So when that low was swept, we can see that we had a bullish reaction here. Now, we got above this thin fair value gap here, inverting it, meaning that there's then an expectation that price is seeking liquidity higher. Now, what happened? Price came in, set this high, right? It then corrected down into this fair value gap, the green one, which it held. It's now moved up and taken that liquidity here. So for me, I'm saying, okay, well, if price is going to establish itself above here, our expectation now has to be for price to move up higher and as a minimum towards this, right? But actually what we're really looking for is for price to move up to here. So in the London session this morning, on a lower time frame, an executable time frame, then there would be no opportunity here other than being bullish. Yeah, does this make sense to people? Because what we're saying here is, well, we're reacting from a bullish array, liquidity is resting higher, we've already taken liquidity from the lows. If price wasn't going to be bullish here, and remember, it's all about the context of the time frame. Yeah, we're bullish on the higher time frame. We might be looking for a corrective move, but we never want to enforce that on the market. We don't want to just sit here and be like, oh, well, I'm only looking for shorts. Well, why? Yeah, why when you've got all this information and data in front of you like you have here, okay? Now, I know this is a little bit gappy on here, so let's move to a 5 minute. But looking at it here, we're using exactly the same techniques. We're reacting from our bullish fair value gap here, right? We said to ourselves, look, we're only following what the price action tells us. We've got our liquidity targets resting above here and here. So now in London this morning, when price dipped into here, what did we say we're looking for? Well, we first of all want to see price sweep a low. Did we get that? We did, yeah? Price swept this low. Then you're saying to yourself, okay, well, where's the high here that led to the sweep of the low? Fine, so we want to mark that across. We do that dotted. We used to call that the breaker line. And remember, guys, this is just one example of a way that you could do this. When you close above here, which we do, we put our stop on the limit order, stop loss below the swing low, our order goes here on the limit, and then we target liquidity higher up. But what we would absolutely be doing here as well is making sure that when we get to key levels, so for example, intermediate term highs, like we've got here, again, a high that's within a fair value gap. I just do that as a dashed line so it stands out a bit more. Then what you can do is you can look to get in and around that line, wait till you get to 1R. Yeah, I don't like moving it before 1R. And then here, yeah, which prices just happen to go up and hit, just coincidence, we could then move our stop loss to entry. Yeah, maybe even trim a little bit of the trade. Yeah, take a little bit of profit because we've got nice margins there. So that's how I would decant and move through the different time frames, finding myself actionable setups, right? And I will absolutely go back to the point you made earlier as well, Craig, about the $70 being, 70K, sorry, being that key level. And all of this is just derived from this, right? I mean, if we just, where did that again? Oh, no, that's already turned off, right? So if we just get rid of all of this again, yeah? And all we're saying to ourselves here is quite simply, if we're using the 4 hour here as our kind of main structure, the things that are, because I'm looking to execute on a 5 minute, if I'm looking to my weekly as my structure, I'm looking to execute on a 15 minute or an hourly, then that's slightly different, but the price action would remain the same. But here, if my 4 hour is dictating my daily bias, yeah, then I'm saying, okay, well, we're delivering from a bullish FVG, which has to be respected. We've got a clear upside liquidity target resting here in the form of this higher. We've got a secondary target resting up here, slightly higher, and this one as well. Okay, I'd favor this one because of the abnormally long wick, showing that there was almost certainly strong sell pressure there before. And then from there, all I'm doing is I'm saying to myself, okay, I use kill zones, which are specific times within the London equities trading session and Forex trading session, as well as the New York sessions. You don't have to. But what I'm looking for here is, okay, price is holding this. Look at the downside wicks. Yeah, this tells you that price wants to push higher. Now, I could be wrong, but what can I do to mitigate myself if I'm wrong? Well, quite simply, as I've done here, yeah, I can look at my similar entry techniques. So as we know, we've swept this low, we've broken above this high. My entry goes on this from the high. I'm targeting this overall. My stop loss is below here, but I want to give myself a position to mitigate my risk if I'm wrong. So then what I'm looking for here are our intermediate term highs. So this high here, which is also relative equal highs between this one and this one, both of which are inside a fair value gap, really like that. So I want to see how price reacts there. I then want to see how price reacts here as well. And then we've got these equal highs here again that are within an FVG, right? So I'm just going to make that a thinner version of that line because that's my real target. Now, I can't really be too interested in what price does here. I can monitor it, but I can't change my position because I'm not at least 1R, yeah? So I need to discount that. We need to trust in the plan, right? But we also don't want to take unnecessary risk. So if we put our stops on here and we say, okay, that's at 0.84R. If price really started to reject heavily here, we can move our stop loss to entry, mitigate our risk. If we're wrong, we step away. If price comes down and takes out our stop loss and then goes to the moon, it's not a problem because we can allow ourselves to get back into the trade. We would simply look for another sweep of liquidity and look for that same entry pattern that we had here. Ultimately, holding our longs at the moment for this high and certainly for this one. And we can see price now starting to build some momentum towards these because that's where liquidity is resting. All right, guys. So let me delete this, right? And then Craig had a really, really good point about 70K. So you were talking about this being on the hourly. And was it this high that you were looking at, Craig? I mean, I appreciate you might be on a different exchange, mate. So maybe it might be on, say, Bybit or something like that. Yes. Okay, perfect. So basically what Craig's saying, because it being a round number, I would imagine as well, and being a previously key level, then obviously there's lots of different highs that we can take here. Yeah. So for me, the way that I focus on that is I look at our immediate liquidity. Yeah. And once again, we can see the same thing kind of playing out here with Bitcoin. If I actually click on the right thing very quickly, we can see that we've taken the lows down here. Yeah. And then price did once again, where's the high that swept the low, which is here. So that would be our breaker line, right? So price came in, induced. We had that nice expansion above. We retested it here. We got the close above here. We retested it here. So now, as I'm looking across here, my key liquidity target is this higher. Now, we all look at the charts very differently. The thing for me is that this is an intermediate term higher, which I was talking about. Please do go to the source if you're interested in looking at that. That would be ICT. Michael's content on that is just superb, but also again, just it is all just steeped in price action theory, right? The reason this is a key high is because it's a high within a fair value gap. This should be a good liquidity pool. Yeah, it doesn't mean that we're just expecting price to reject here, but if we were big players and we'd filled some big positions here, then our expectation is that this is the nearest point that there'll be key liquidity, right? Because this is that price was higher, high, higher, low, higher, high. This is also the point of a reversal, right? We're always looking for confluence as traders. We have this, which is our bearish fair value gap that we can see rejected price here. Price came down, drew back into this, left this higher because there were a load of people that went short here, yeah, or in and around here. And then their stop losses are above that, right? And they're targeting down here somewhere. Now we've hit that, price is coming back for these stops. Now, price could reject here, price could reject here or here, yeah? And this is the point I think that our good friend Craig is trying to make here, is that we've got this high here at 70K, which was a round number, which is always typically targeted in cryptocurrency. You can look at it through the history of Bitcoin and its rise, how often it's hit those round numbers and had a key level there. But yeah, I would definitely be looking at that. The key thing for me here is saying to myself, okay, well, where have I got into this move? And I want to be in from down here. If I'm in from here, there's a little bit of uncertainty, because if I'm looking at this again from a point of premium and discount, right, then this is the leg down, right? Because market structure this way, engage with a fair value gap here, and then market structure broke in the opposite direction. This is our dealing range. Long setups were favored from down here, yeah. Short setups from here. Now, it doesn't mean that it would stop me entering long positions here, right? It just means that I would throw a little bit of caution to the wind in that respect while I'm looking at it, okay? And then, look, whenever I see a really big, clear and obvious fair value gap like this, yeah, when we then, when, in my opinion, price gets back above this and we have that kind of like strong close, yeah? So again, strong close up here. You want to see a candle with not too much in the way of wicks either way. And if anything, a longer downside wick, right? Shows absorption to the upside. But getting that close above here, right? Invalidating this, meaning that we flip this from a bearish fair value gap to an inverted one. Then what we're doing is we're looking for price to come in here, treat this as support, and then move higher. All right. Always getting our same kind of pattern. Yeah. So always looking for a sweep of the low to induce, and then looking for the high to be broken, ideally with some momentum. And then we can look for our entries in and around here. All right. So that's what I'd be looking at. I hope that's kind of put a little bit of insight on it in terms of that. I hope it didn't get too kind of convoluted there towards the end. But when we're looking at these things purely from a liquidity perspective, it's so important that we understand our time frame, right? So as we did, just to harp back to this very quickly, we can see here, and still, even with this one on buy a bit, right? And even with the skinniest of lines, we can see that we haven't got that close above that level, right? Does it mean that I think price is going to drop from here? I just don't know. I just don't know. It all depends on the reaction here. So all I'm then doing is I'm cycling down through different time frames to give myself a better indication of what's going on. What has me marginally bullish here was that, okay? The fact that we got that sweep for price to move higher, but that doesn't mean that I think price is going to skyrocket from here. It means that I still need some more context, all right? So as I move down to a 4-hour chart, quite simply, and what we can see here, this is what I was talking about, we can see that we don't have that gap here. Remember on the Femex chart, we had a little gap there that helped us go long. That's why it's really important to understand the exchange that you're trading on, right? We have a very, very slender gap here that's bearish, right? If I just really zoom in, you can see it's the gap here, right? And it's between that high there and that low, right? Now look at what a good job that gap is currently doing of rejecting price, yeah? So on a 4-hour scale, which is in exactly 2 hours and 56 minutes, if we close above this here, bearing in mind we'd be taking out the local liquidity of this high too, draw that in red. If we can get ourselves a strong close above this, right, do that in green to show that it's bullish, then all of a sudden I'm looking left and I'm saying, okay, where's the next most likely point? And there's a few, okay? I'm looking at that high there, this high here, especially this high, because again, it's within a fair value gap. So if we got that close above, all of a sudden I can then go down to the lower time frames and look for those liquidity sweeps as price kind of steps back in and shows us some bullish strength. Now, we always want to have, or I always want to have plans to go both ways, right? So bullish fair value gap here. If price closes below this, right, then my assumption is that price is going to move lower than that, right? So bearish close below this, I would say that that's then showing weakness. If price is bullish, then it should want to move up from here. It shouldn't want to kind of step back down to where it's already kind of been to sweep liquidity. If it does, for me, I see that as a sign of weakness, and all I'm doing there is just looking for the opposite of what we were just discussing. I'd be looking for a sweep of the highs, yeah, and then you would want to see price come down and close below the low that swept the high, and then you could look to retest that area there, right? So you'd want to see a sweep of the high, you want to see that low that sweeps the high closed below. You can set your limit order around there, right? Or you can play the momentum down here, or if you have a fair value gap here, for example, you can use that as an entry. And then that would be my first target, lower down. All right, guys, look, it's been fantastic to have you all on the stream. I think at some points we had 4,000 or 5,000 people live on this one, which is just amazing. Really appreciate all of you guys and the time that you put in. Apologies, actually, let me just go through the questions very quickly, because we had one from Nick. BC, what's your thought on price wicking in quick and up again based on current sentiment? Well, I tell you this, it's a really, really big, really, really, really big thing for me is how price reacts, okay? So let me just show you this just as a parting kind of thought on this very quickly, because watching how price reacts at a key level for me is really, really important. If I can even get rid of the the cross, here we go. So if we look at any of these points here, and this is a really, really good example here, okay? So we had this accumulation here, right? A bullish accumulation. You see price accumulated here, and then it ripped away. Now, when we had this violent drop in, this obviously got a lot of people bearish. Now, what you want to do is whenever you see a really violent and aggressive sweep of liquidity on one side of the market, yeah, especially when you have a really clear and obvious fair value gap like that, for me, it's all about watching the recovery, yeah? As soon as we drip down, we have that V-shaped recovery, yeah? You can see how that's like, it's just in really, really sharp back and forth, yeah? then I really like using these fair value gap inversions, especially if we leave a balanced price range like we did here. You can see if you extrapolate this across, it's still playing a part today. Yeah, this should be strong support, this area, right? So once, twice, 3 times, now 4 times that's found support in that area to move higher. So when we look at how it reacts, you want to see this. Think of it like this, and I give these terrible analogies to some of my students and some of the wonderful people in our Birdnest community who endure me rattling on like this on a regular basis. Think of it like a pan of really, really hot water. If you can kind of dip your hand in, so, you know, if we looked at something like this, for example, right, there's no real kind of big aggressive moves here. Yeah, price didn't go like that and then straight back down, did it? What happened is price kind of came in, meandered around here, formed like a falling wedge, yeah, or a bull flag, and then it's popped, okay? However, if we're looking, when you look for key highs and lows so often, right, look at this. Look how kind of like direct and the recovery of price here. And really make sure that you're looking at the gaps and what the gaps do, right? Price came down and then boom, flew straight back up, right? What do we use there as a marker? We say to ourselves, oh, do we have any gaps? We do. Bearish fair value gap here, right? So it doesn't form a balanced price range in the end, purely because we didn't get a gap here. But look at how powerful that is a support. 1, 2, 3 times to accumulate, and then this huge expansion higher. So to answer your question there, Nick, which is a brilliant question, looking at how price reacts at levels is so key. All right. Awesome, Craigie boy. That's great. Daniel BM, sorry, I didn't get around to this, mate. They're in liquidation 1.6 billion around the 50s. Wow. Okay. Yeah. Really interesting. So what Daniel's showing us with us there is the liquidation data, meaning that around the 50K region, I think he means there is a lot of liquidity to hunt, which is really, really interesting and something we can use with when we build out our work on liquidity mapping, which is something I'm going to get Razoon on the live show with us as well. All right. McRaw, great to see you as well, mate. Tammy, lovely to have you here. A big shout out. Moral, sorry, mate, I've seen that. Oh, do me a favor, mate. Can you just say hi in one of the posts I put on Twitter and I'll slide you a DM? All right, Monday lunchtime's always a blessing. Awesome. It is for you as well, guys. Look, apologies, I'm a bit croaky. I'm still not kind of fully with it, but I really didn't want to have any more time away from you guys. I'm going to be back again live on Wednesday, which is going to be for everyone. Obviously, for all of our wonderful members, Trade Club's going to start again tomorrow, so we'll be live trading again tomorrow. We're currently sat at 7.2R up from our opening session, so we're going to look to push ahead with that trading. Mostly, we're going to have a feature on the NASDAQ and probably on Ethereum and maybe some really kind of high volatile alts that we can look into as well. So for me, it's just time to say a really big thank you to all of you. Please also do be aware of the economic data that's coming out. So, you know, take a look at something like Forex Factory or Baby Pips and find out when the big key things like FOMC is happening, CPI, etc. We saw some big reactions in the market last week combined with that. Obviously, the key thing, especially for crypto, is the FOMC announcements. But have a fantastic week. Please don't hesitate to reach out to us. You can find all the information for the trading group, the community, the education side down in the description. And you can also reach out on Twitter at any point. Moral, please do just ping me a message or just, you know, comment in one of my posts and I'll ping you a DM. My friend, have a fantastic week, everyone. I look forward to seeing you around the nest.